Hey, listeners. I just hosted Brandon Millman and Sam Rosenblum, CEO and VP of Ops from Phantom, on the show. Phantom's been a long-time Solana-focused wallet, but in recent months, it's begun expanding more and more outside of just the wallet game. First, it added perpetual futures trading by way of Hyperliquid. Then, more recently, it acquired SolSniper, adding better features for meme coin traders. So I thought this was an interesting moment to hear how Phantom is thinking about its own trajectory headed forward. We get into Phantom acquisitions and growth plans, a potential IPO, some alpha on what Phantom is building next, and much more. Let's get into it. This episode is brought to you by Katana, a DeFi-first chain built for deep liquidity and high yield. You'll be hearing more from them later in the show. Nothing said on Lightspeed is a recommendation to buy or sell any investments or products. This podcast is for informational purposes only, and the views expressed by anyone on the show are solely their opinions, not financial advice or necessarily the views of Blockworks. Our hosts, guests, and the Blockworks team may hold positions in the company's funds or projects discussed. Hello and welcome back to another episode of Lightspeed. I'm your host, Jack Kubanek, joined today by Brandon Millman, CEO of Phantom, and Sam Rosenblum, the Vice President of Operations at Phantom. Obviously a very core, longtime Solana team that I personally have not done an episode with yet. I know, Brandon, you were on the show a little while ago, but I'm quite excited for this one. So thank you guys for coming on.
Yeah, thanks for the opportunity.
You did an episode before I was on Lightspeed where you kind of told the Phantom story a little more. And so I encourage people to go check that out. But I'm just going to start more present day with a big question that's something I've been thinking about that I want to get your guys' take on, which is basically, is everyone in Solana DeFi just going to end up building the same thing? To put a couple pieces of context on the table, Phantom recently acquired SolSniper, which is sort of a Solana trading terminal. You also recently added perps by way of Hyperliquid. And these are moves that I think other Solana DeFi teams are moving towards as well. So, trading terminals is something that Jupiter and like Pump Fund have been interested in. Adding perps, obviously, something that Solana is working on as everyone tries to kind of catch Hyperliquid. And I think for a lot of teams that have seen success in the DeFi world, or let's say the, Solana trading world in some way, there's kind of a suite of products that users want and kind of a competition to become the Solana DeFi SuperApp. So with all of that throat clearing, let me just ask kind of plainly, do you foresee that a lot of different teams in Solana DeFi are going to end up building products that look very similar?
Well, yeah, that's a good question. I think that that's not necessarily a bad prediction. I think that over time, we've kind of had a couple different cycles across multiple ecosystems. So not only Ethereum, but Solana, and now places like Hyperliquid, et cetera, where there has been a lot of innovation in DeFi. There have been a lot of different use cases that have popped up. And you do see a lot of consolidation in the types of use cases, specifically around trading, specifically around perps and things of that nature. And so I think that as the ecosystem gets more mature, I think folks will start to invest more in certain use cases that are the predominant ones. That being said, I think the innovation curve for crypto is definitely far from over, and part of the huge, one of the huge, draws and advantages of crypto is that it's an open, permissionless ecosystem, and innovation can come from anywhere. I don't think that. I think you'd be hard pressed to find someone who really anticipated sort of the meme coin wave of 2024. And similarly, I don't think I could probably sit here and say, hey, there's going to be no new metas, no new innovation. But I think there have been definitely very clear use cases that have emerged. And, we view our job as really making sure that those use cases are as safe and easy and usable as possible, and can be brought to a mainstream audience. So I guess a couple scattered thoughts about that. But Sam, if you want to add anything.
Yeah, I think that's spot on. I mean, I spent the last 6 years in crypto venture before joining Phantom a few months back. And there's this funny thing that happens in crypto where as the meta evolves, like you would kind of hear from 5 or 6 teams all kind of on the forefront of that new meta. And it's just, yeah, it's kind of a nice feature of the ecosystem. Like we really are inventing a lot from scratch here. Now we got a decade and a half under our belts as an ecosystem. The building blocks evolve and like the windows of opportunity kind of like shift and open up. And so, yeah, it totally makes sense that you're going to have people kind of trying to jump through those gaps. I think where Phantom and some of the other folks you mentioned earlier, Jack, where we have this really interesting opportunity is the combination of innovation and then distribution. And so this is something we talk about a lot internally is, we've got a lot of users all over the world, tens of millions of users over the world with value sitting in Phantom accounts today. And so I think it's our responsibility and opportunity to try to bring value to those users. And so, yeah, you'll see us continue to try to do that for sure.
Sam, you sort of jumped the gun on what my follow-up was going to be, which was, say in 6 months, a year, the Jupiters of the world, the pump funds, Phantom, whatever else, these DeFi apps on Solana all end up looking roughly the same, which is, if I open this app, I can do most of the same things. I can lend, I can trade meme coins, I can swap, I can trade perps, whatever else it is. And so if we're living in that world at some point in Solana, how do you think about competing? Like, how does Phantom come out on top in a world where, competitors might offer very similar features and could maybe compete on costs in the short term and things like that? You mentioned sort of distribution and innovation. Is that the answer you'd go with?
I'd say before distribution and innovation, our real bread and butter over the years has been usability. I think pretty much anyone who's familiar with Phantom knows that it's synonymous with great user experience, and has helped Solana be viewed as a chain with great usability and UX. And so I think really leaning in on our expertise there is basically going to be our differentiator. And also, in our view, is what the crypto space really needs to break into the next gear or next level from a mainstream adoption standpoint. When we started Phantom, it really was around this thesis that, hey, usability is actually the highest leverage thing that we can work on as a space in order to really push forward mainstream adoption. And that's something that sounds obvious, but I think has been quite difficult to really put into practice, especially marrying together everything innovative that's going on chain. And so our bread and butter is really about, taking everything that's innovative on chain and approaching it from a first principles kind of way, and making it as easy to use and safe to use for a broad mainstream audience.
I guess then let's just take a step back and chat a little bit about the recent sort of moves Phantom has made. It seems to me like there's been a concerted effort to deepen Phantom's involvement in DeFi or your presence there. I mentioned Hyperliquid and now Soul Sniper. Has that been sort of a conscious move over the past number of months to move kind of beyond just a wallet into more of a super app where you can, trade perps, do more advanced trading, Telegram bot stuff? Is that sort of something that is going to, happen at Phantom going forward?
Yeah, totally. I think that's something that you can expect us to do more and more, especially as we kind of talked about earlier, that the sort of core use cases and core pillars of the crypto ecosystem, specifically the on-chain ecosystem, become more and more, come more and more into focus. And so, this next leg for Phantom is all about going from just being viewed as Phantom Wallet to being viewed as this consumer finance platform, sort of the next generation consumer finance platform for the next gen internet native, and really harnessing everything that's going on chain specifically. So short answer, yes. And yeah, as you kind of aptly observed, things like our perps integration being sort of this first party sort of white labeled feature, is sort of is an illustration of that.
Incubated by Polygon and GSR, Katana is something different, a purpose-built DeFi chain that's focused on giving the best experience possible. It does this by sustainably generating deep liquidity and sustainable real yield. Katana is built from the ground up, with DeFi mechanics to keep your bags from just sitting idle. All you need to do is use your favorite protocol, and Katana mechanisms do the rest of the work for you. Katana is launching with a notable ecosystem of primitives, assets, and partners including Morpho, Sushi, Lombard, Chainlink, and Yearn. Katana is a DeFi-first chain, built for deep liquidity and real yield, by redirecting chain revenue back to active DeFi users. The 1 billion CAT campaign is live. Bridge and deposit directly into vaults in one simple click, and start earning immediately on your ETH, BTC, USD, and more. As always, investments in blockchain technology involve risk. Terms and conditions apply. Do your own research. What's your take on Onchain Equities? As you mentioned, a next-gen consumer finance platform. Is that all hype, no substance, or is that something that you're kind of interested in at Phantom?
That's a good question. I can start off, and then Sam, if you want to jump in as well. I think it's something that's definitely super exciting. I think in general, I definitely applaud all folks who are working to bring sort of the world of traditional finance on chain. It's definitely a bit of an uphill battle, and I think it's typically been something that's quite difficult for issuers. And so, I mean, from a positioning perspective, I think in order for us to really say, hey, we're going to become the consumer finance platform of the future, that means being able to grant users access to a whole world of traditional, or a whole world of financial applications, whether those are more bleeding edge on chain or whether those are traditional finance. But I will say, I think where the real gas is left in the tank, or where the real, I think, next leg for crypto is on this more bleeding edge front, which includes things like perps, prediction markets, things like that. Sam, I don't know if you have anything out there.
Yeah, no, I think it's such a fun topic to talk about, because like I actually zoomed out and you put kind of like the venture hat on and you look 10 years in the future. All of this stuff seems like it's a matter of time, and it's kind of funny thinking back. If you went 10 years back and you talked about like, what do you think about the future of on-chain dollars? It's one of those things where there's innovation, there's technological building blocks, and then there's just sort of macro regulatory sentiment generally. And what an amazing 10 years it's been for on-chain dollars, right? Going from effectively non-existent or not really widely observed as real to where we are today with literally, with now US legislation in place. So a lot can change in 10 years. When you think about any specific asset class like equities, all of that, to me, it's the same question. It's just a matter of time. And again, it does take regulation. It does take sentiment shift over and above just being technologically feasible, which is kind of where we already are today. The other thing, though, on this topic that's really exciting is like that's kind of the expansion of assets in the category, like currencies and equities and all these things. There's also just the expansion of types of markets, and perps, like you guys have already both talked about. It's really cool seeing the types of markets that are starting within our sort of crypto echo chamber and then expanding and like becoming full-fledged markets that are just like observed out in the wild. So I think that'll continue to happen. I think we are in a really great position there where our users tend to be kind of earlier adopters of those sorts of markets. So I think you can expect us to continue kind of pressing that advantage as well.
I think that something Lightspeed listeners will be interested in is why you guys went with Hyperliquid for the perps integration. Phantom started out as this Solana wallet. There are perps on Solana on a couple of different venues, but Hyperliquid, I think many would say, is a superior product. So, I mean, at least at this current time. So I guess I'm just curious to hear from y'all. What was the consideration that led you to go Hyperliquid rather than a Solana native perps platform?
Well, I think I'll start off answering that question by saying that Phantom is still in a vast, still very majorly aligned with Solana strategically. The vast majority of our development efforts, users, and things that are going on Solana or things that are going on in Phantom are still very Solana first. And there's a reason why we went Solana first when we started. Is we actually all came from the Ethereum space, working for close to 4 years on OG DeFi projects back in the day, and we really saw Solana as pushing the needle on specifically usability, but in the realm of building fast and cheap infrastructure, which ultimately downstream enabled a lot better user experience for users. And so, all that's to say, we're still very much Solana maxis and Solana bulls. But I think, but before us being Solana maximalists, I'd say we're user maximalists first, and we are always thinking about how we are going to best serve the user with everything that we build. And for most cases, I'd say that is building on something that's on Solana. For this perps case specifically, it really came down to, again, how we provide the best user experience for users. In the world of trading and perps, that means how do we get the best prices for users? How do we get the broadest access to different types of markets? And just from a purely objective stance, it's quite difficult to compete with all of the ecosystem momentum that Hyperliquid's been able to build in this realm. And if you just look at sort of the objective numbers, price execution, liquidity, and all of that is, in some cases, an order of magnitude greater on Hyperliquid. And so by completely ignoring that, I think we would have been doing a pretty big disservice to users. And so, it really kind of comes down to that.
Maybe quantify for me, post integrating Hyperliquid perps, was it something that resonated with users? Like, was there a big bump in usage of that product so far?
Oh yeah, 100%. It's something that we're still, still growing and investing in. But when when we built the perps product, it was the thesis behind it was really, how do we take something that is typically been pretty hard, viewed as pretty hard to use, sort of exclusively for advanced users and maybe even a bit too dangerous for retail users, and actually bring that to our audience, which is primarily very consumer, retail and mobile focused audience. And so I think that we were able to land that quite well, and the proof is in the numbers. We've become the number one venue to trade perps on Hyperliquid, outside of the the main Hyperliquid interface itself. Number one builder, number one user of builder codes, and number one source of new referrals for Hyperliquid as well. All those things can be verified on various dashboards across the internet. So yeah, overall, I'd say definitely been pretty successful so far, but something that I think we're just kind of scratching the surface on.
And then again, from a business perspective, this sort of reminds me of a drum that I think a lot of the Blockworks research guys are beating recently, which is that in crypto, it's very important to own the end user. And if you're in the middle, you're basically going to get squeezed out as far as margins. And so this is why a lot of people really like Axiom, which has sort of found a way to combine meme coins and hyperliquid perps into one product. So are you finding that from a business perspective, like at Phantom, it's important not just to be the wallet that someone connects to another website and uses there, but it's actually important to own the end user. So they're going to Phantom to trade perps or whatever it is they're doing on chain.
Oh yeah, 100%. I'd say owning the end user and the strategic importance in doing that is not just a crypto specific phenomenon. It's really an internet specific phenomenon. And there's this great blog post. The name is escaping me by Ben Thompson at Strategy, where he describes talking about how in the internet age, actually one of the most, history has shown that one of the most strategically important places that a company can be in is actually owning the end user. And yeah, in crypto is no different. And yeah, one of the biggest strengths that we have is distribution and being able to distribute a number of different types of products. But I will say in the case of Axiom, I'd say their audience, I think, leans a little bit heavier towards much more advanced meme coin traders. And they have not necessarily been able to convert that audience into traders as effectively as we have with our audience. And so, user bases are not all user bases are made equal, I guess. So to say.
Is Phantom's user base price sensitive too? Because I guess something I've thought about is like, if you're Phantom, you probably can get away with charging a higher fee than, say, a DEX aggregator or something on top of swaps, because people are already in the wallet. They just want convenience. They want to very quickly, move from Solana to whatever meme coin they want to buy. So have you found that price matters a lot to your users, or does the convenience make them more, I guess, price insensitive?
Yeah, I think generally, I mean, when you think about consumer products specifically, because I think to what you guys have alluded to, there's kind of this, there's a consumer side, there's like the prosumer, advanced trader, and everything in between. And yeah, our users certainly, I think, are really mobile forward. They're looking to probably do things in real time and not, think about it and come back and do it 2 days later. Generally speaking, like those are attributes that like get you to that premium pricing type of tier. That said, our pricing is actually like, I would say generally we're in between, call it what like a Coinbase consumer pricing would be and a Coinbase pro pro trading pricing would be. And it seems to be working, right? Like the growth kind of speaks for itself. I think that the guiding principle for us is just to provide the overall best user experience, and pricing is a part of that. So we're certainly conscious of that, and we're not trying to sort of turn the screws as much as possible. We're just trying to kind of provide the overall optimal experience.
I guess to finish drilling down on sort of the business strategy and considerations at Phantom these days, which I really came out and hammered you guys on, so thanks for bearing with me. But in the Soul Sniper acquisition piece, Brandon, there's a quote from you that says that you're basically looking to aggressively grow through acquisitions in the coming months. So I wanted to ask a little bit about that quote, maybe provide some more color there. And then also more specifically, I'm just curious, when you look at the M&A market, how to put this? Like how many viable, worthwhile, like good M&A, like acquisition targets are there? Because sometimes, when Pump Fund raised $1 billion, I was playing this game of, okay, if I'm Pump Fund, who do I acquire? And it's not as easy as you'd think to find like a well-priced business that's, worth acquiring. So that's another piece I'd like you to get into.
So I started my corp dev or M&A experience started at Coinbase in the really early days. I started at Coinbase in 2014, and then by the time 2017 rolled around, we started to be acquisitive back then. And again, crypto, you get these evolving metas, evolving regulatory landscape, evolving building blocks, all of these things. And again, that dynamic between innovation and distribution is just such a fun one to tap into. So yeah, we're in this really great position where we get to talk to founders, literally on a daily basis about the opportunity to join forces and how we can make kind of the combination of two companies, 1 + 1 = 10, so to speak. So it's something we're really actively on the ball. We actually just promoted from within Joe Wadkin, who's been at Phantom for a couple of years, to our first head of corp dev. And so he, I think over the last 30 days has talked to 30 different founders, and like that will only continue. I think the last 12 months we've successfully done 4 acquisitions. And again, we're kind of just getting started. So we've got a really robust roadmap that we want to execute against, and M&A is just this tremendous tool to accelerate that roadmap. Soul Sniper is a great example where we knew we wanted to go out and get into advanced trading. And these guys have been doing such a great job at that. And so we had the conversation with Max and the team about what it would look like to join forces. And we spent a couple of months really drilling down with them. And I think both sides got really excited about the opportunity. And now here we are.
So those 4 acquisitions, you have Soul Sniper, Bitski, which is like the embedded wallet one. What were the 2 others? Are they public?
Bitski was our first one that we did. I think it was just over a year ago, or just about a year ago. Then Blowfish happened at the end of last year. So Blowfish, Web3 security company who primarily was building transaction simulation technology for wallets. After that, in the beginning of this year, we did Simple Hash, which is a data indexer, data API provider around helping apps surface like token balances, token metadata, things like that. But also, actually, almost more importantly, token spam identification, which is a huge problem and still continues to be a pretty huge problem in the on-chain landscape. And then, of course, Soul Sniper recently.
And you'll notice, like in those examples that Brandon just rattled off, like those are all such different products and different value propositions that just plug in various places into our roadmap and maximizing the end user's experience. We actually talk a lot about trust and safety internally, like some of those examples there. The thing with M&A, it's like, getting a deal done with the founder is one thing, but actually properly integrating these, that's where the magic happens, right? Like you could go find the most interesting products and teams out there, but if you don't integrate them successfully, then it's kind of bad for everyone. And that's where I was really impressed coming in, I guess, 4 or 5 months ago now, when I joined Phantom, that they had already done, without a proper corp dev function, they had already done 3 acquisitions, and it was working. Like the teams and products that had been integrated, it was all done in a really great way. And that usually, for companies as they're just getting started with that M&A or corp dev function, that's the hard part. Like, finding founders where they're excited about you and you're excited about them. It's not easy, but that part you get done. Integrating it is where the magic happens, and that's where so far I'd say Phantom, even before my time, has just been knocking it out of the park. So hopefully we can really lean into that and continue accelerating our roadmap and accomplishing these things for our users in a faster and better way.
And Sam, you mentioned, nearly every day or so you're speaking to founders about potential acquisitions. In your do you get the sense that it's really a seller's market out there right now? And if you're X stablecoin platform or whatever, that you're just fielding tons of calls from potential buyers?
Oh man, this is a fun one too. I think I probably mentioned I spent the last 6 years in crypto venture, and so you really feel those pendulum swings in terms of like who's in the advantage position between the sellers or the buyers, and it changes, and you're spot on. Like stable coins, obviously, sort of going back, even predating the Stripe Bridge acquisition, but like that was certainly a really big moment for the industry and for the category of stablecoins. And you feel that pendulum swing as a venture investor. All of a sudden, valuations go up as a potential acquirer. Obviously, similar thing. I've found actually though the really important thing here for maybe a positive leading indicator of when the integration is going to go really well is when the founder of the potentially acquired company is not just motivated by maximizing the valuation of the deal. Like usually it is the case that if you're motivated mostly by that, I would be willing to bet that probably the integration is not going to go as well as it could have. And in the case of some of the acquisitions that we've done, and Brandon can speak to this, like these are people that we've worked with in the past. These are people that we tend to know. In the case of Soul Sniper, I mean, like Max is just so obviously a phantom bull himself, where like there has to be that chemistry there, right? If it's just a financial transaction, like I don't know, I think that tends to not be the best leading indicator in my mind. But yeah, I think certainly, yeah, metas come and go, pendulum swings. Right now, obviously, with the legislation that's just come out, stablecoin platforms for sure are fielding a ton of inbound, either from investors or acquirers, and that's the nature of the business. But yeah, that's something that we navigate pretty well.
So Sam, like, let's say you came into a different company that is not Phantom, and they're doing a horrible job of integrating their acquisitions. Like, what changes would you make from an operator perspective, or what advice, I guess, would you give a founder who may be looking to acquire, companies in the crypto space?
Totally. Yeah, that's a fun one. I mean, I don't want to I don't want to go too deep down the rabbit hole in like a corp dev tutorial, but I mean, essentially, if you can't get the integration right, uh, you should slow down and do a lot less M&A. It's kind of like one of those things. I don't know, a sports analogy. It's like if you've got if you're really good at playing soccer, but you can't take a shot on goal, like the rest of it doesn't matter that much. So yeah, my advice to companies out there that are just getting into M&A and just figuring that out, it's really, really easy to fill up a top of funnel. It's really hard to get good from scratch at integration. Oftentimes, I would say the cheat code for this is you start by acquiring and integrating founders and teams that you already know pretty well. And so I don't know, Brandon, if you want to speak to maybe the Blowfish experience on that side.
Yeah, no, yeah, totally. I mean, I think, just to double click on what Sam said, we really want to look for sort of founder company fit as well, or team company fit. When we're looking at different companies, we're not only thinking about, hey, is this company's product going to help us accelerate our strategic roadmap? It's, do we actually want to infuse the company with the DNA of this team? And yeah, to what Sam said, we actually had known the Biscuit team for a very long time. We'd known the Blowfish team for a very long time. I went to college with Fabio, who's the CEO of Blowfish. We both worked together. I alluded to our past working in Ethereum and early DeFi projects. We worked together for many years at 0x, which was an early DeFi project on Ethereum. And so, yeah, I think in those cases, those previous relationships really helped us kind of de-risk this integration period and help us really stick the landing there. And made us feel quite confident in moving forward with those. And so I think that's a little bit of the secret sauce behind some of the success of the early acquisitions. But I will say Soul Sniper is a little bit different, that we didn't necessarily have a personal relationship with Max, but to what I said earlier, he is someone who, as you saw from sort of the announcement tweet, is very deep in the trenches, very embedded in the Solana community, very deep respect for a lot of the builders and traders on Solana. And so, he and his team are definitely folks that we felt very, very high conviction around bringing their sort of DNA and energy into the team. But yeah, still pretty early days of their integration.
Incubated by Polygon and GSR, Katana is something different, a purpose-built DeFi chain that's focused on giving the best experience possible. It does this by sustainably generating deep liquidity and sustainable, real yield. Katana is built from the ground up, with DeFi mechanics to keep your bags from just sitting idle. All you need to do is use your favorite protocol, and Katana mechanisms do the rest of the work for you. Katana is launching with a notable ecosystem of primitives, assets, and partners including Morpho, Sushi, Lombard, Chainlink, and Yearn. Katana is a DeFi-first chain, built for deep liquidity and real yield, by redirecting chain revenue back to active DeFi users. The 1 billion CAT campaign is live. Bridge and deposit directly into vaults in one simple click, and start earning immediately on your ETH, BTC, USD, and more. As always, investments in blockchain technology involve risk. Terms and conditions apply. Do your own research. Yeah, okay. Interesting overview, because I don't know. There's not a whole lot of teams, I mean, I guess Jupiter, but otherwise that have done, that many integrations in the past year or so. Speaking of liquidity events that are hot right now, have you guys been thinking about the IPO market at all?
Yeah, it's hard not to think about it with everything that's going on. Obviously, for a very long time, Coinbase is pretty much the only example of a model company that's setting a very strong benchmark. But of course, Circle's recent success in the public markets has been a very clear signal that there is a huge investor appetite for crypto companies, more broadly. And I'd say the way that we view going IPO is sort of as more of a tool in the toolbox versus an end state. When we're building the company, we're really thinking about building Phantom into this generational company with generational impact and really play a huge role in bringing crypto mainstream. And, going IPO or going public or accessing public markets is sort of a tool in the toolbox to do that. And so that's how we view things. But when internally, I think we do measure ourselves, I think, in a lot of the same ways that a public company might, in terms of operational maturity, profitability, revenue quality and business quality. And so, yeah, I'd say, we definitely are measuring ourselves up to the same standards as a public company. But whether or not we take that leap is more of a broader strategic decision about how we can get to this end state where, we're actually bringing crypto mainstream.
Yeah, I mean, Brandon just alluded to this. I think there's like a couple of key reasons to go public as a private company. One of them is access to capital markets, and then another is operational maturity. And we're in this really fortunate position where we don't really need the former. There's probably a great example company would be something like Stripe, where it's like when they need access to capital, they go and do a fundraise and they raise it, and they've got a lot of phenomenal investors out there that are really happy to be a part of that. for us, we do talk a lot about the latter, though, which is the operational maturity. And I think companies like Coinbase have blazed the trail here, as Brandon said, where they've demonstrated what, and then they help kind of give us some signal in terms of what the public market and public investors respond to. And I think Coinbase, I'm biased, but I think they've built a tremendous business over, a decade and a quarter or so. And they, as a public company, have really put a big emphasis on revenue predictability, diversifying revenue streams. So, like, of course, those are things that we measure up ourselves against. Even though we're not a public company, we try to think through that lens, like how would the public market react to this? So, to Brandon's point, we certainly think about that operational maturity as that's where we're at in our growth stage. Does that mean we're kind of itching to go public on the tail of Circle and Figma and these recent really impressive public offerings? No, I don't think that really impacts our timing too much.
So you just don't want to sum up.
Yeah. Well, yeah, I mean, yeah, there's just to maybe state the obvious, there's huge, there's a lot of operational complexity that gets added into a company once you take that step. From a reporting and compliance perspective, and from a functional manpower perspective, and all of that. And so I think for as long as we can not necessarily take on those extra burdens and focus all of our attention and resources into building the best business possible, I think what we're going to do. But yeah, definitely something we're keeping an eye on for sure.
It's interesting to hear you characterize it that way, because I think in DAT world and like SPACs sort of starting to return in the crypto world a little bit too, it can feel at times like going public is like a feather in the cap and a thing that you should do in crypto to kind of prove your legitimacy. But if you look at the broader tech world, there's a lot of private companies that could and maybe even should, depending on who you ask, have gone public a long time ago and just don't want to for various reasons. So it's like there's a maybe more mature version of crypto where it's like just because you can go public doesn't necessarily mean you absolutely should make that decision.
Yeah, I mean, as you say that, Jack, it reminds me of, this is kind of like when I was getting my start in tech in the 2010s, when I first moved to San Francisco. I feel like there was this moment in time where it almost felt like fundraising was the feather in your cap, that was the gold star, which is actually like that's not a good thing. Like if you're a founder, if you're an early startup team, you have like a mission and a vision that you're going up against and trying to accomplish and deliver to your users. And then there's like, how do you keep gas in the tank? And that's what the fundraising is. Like it really is just, it's a resource that you need in order to build the thing and deliver the thing you want to do. And we're really fortunate. We have a tremendous cap table, like, one of the more impressive cap tables I've ever seen. And that's not the point though. Like, it's great that we get to partner with those people and get to work with them on building what we're building. But the point is what we're building. So that's definitely where we keep our focus.
Yeah, well put. Speaking of your cap table, I kind of wanted to get a little bit into maybe just the future state of Phantom and this vision of a broader consumer financial platform. I forget how you put it earlier, Brandon, but I was, prepping for this episode and I remembered Anand Iyer, if that's how you see his name, if that's how you say his name, the owner of the Twitter handle AI, which I remember I talked to him once and said, dude, how much money are you being offered in DMs for that handle? It must be a lot. That's either here or there. Anand tweeted, and I don't know if he's a Phantom investor. He may be. I know he's a VC. He said, just set up my 11-year-old's first crypto wallet on Phantom. She will likely never need a traditional bank. The future shouldn't be inherited. And I kind of wanted to bring that tweet up just to ask, like, is that sort of the vision for Phantom, that over time it becomes more bank-like and it is where users aren't just going to do crypto stuff, but it's where they're doing like just more and more of the ways they interact with money and finance?
It's so funny actually that you bring up Anand, because Sam and I literally just caught up with him yesterday.
Shout out Anand. Yeah,
Yeah,
he came by the Phantom office yesterday.
yeah, and yeah, Lightspeed, they are investors in Phantom as well. Yeah, I mean that's a really awesome anecdote. I'd say yes, 100%. Like the way that we're thinking about positioning Phantom as a product is, I think there's sort of a little bit of a false goal. A lot of people kind of throw around this saying that's like, hey, like crypto needs to be as easy, so easy enough for your grandma to use, or your parents to use, and I think that that's actually a little bit of the wrong goal. I think we're really positioning Phantom as sort of the next generation consumer finance app for that next generation internet native, right? That's where all the growth is going to happen. That's where all of the early adopters are, and really where the bleeding edge is going to happen. And yes, I do genuinely believe that the sort of TikTok generation, or Gen Z, Gen X, etc., like their financial lives are going to revolve primarily around consumer finance apps that live on their phone, or live, where they are living, not necessarily Schwab.com or even Bank of America, or something like that. And so, yeah, I think we actually are getting quite close to that world, especially with the advent of stablecoins, and their broad adoption from, from a regulatory perspective as well. And so, yeah, I think we're not too far from the future where someone's first sort of foray into the finance landscape is going to be downloading Phantom and loading it up with dollars, which are technically going to be stable coins living on a non-custodial wallet.
It always makes me smile, like every 6 months or something in my Twitter feed, my X feed. There's always like someone who's like buying a house for the first time, or like doing something where it's like, oh my God, I just had to go into a bank branch and do like fill out these forms with a pen and paper. It's like, oh my God, I can't believe I just did that. Even just someone in one of my group chats just sent a screenshot the other day of that they made their first angel investment using a stable coin rather than a wire. And they're like, I just like sent it, and then it was delivered, and that was it. It's like, what? It's like, yeah, man, that's how we're doing it over here. So yes, I think it would definitely reiterate what Brandon just said. Like this is, to us, is just so obviously how people will interact with financial services and tools in kind of an internet native era. And it's going to be so funny looking back, even 10 years from now, like looking back at the fact that you had to go into a bank branch, or like to get a wire, you had to wire it before the 1 p.m. cutoff and all this stuff. And like, get the call back to verify all these things that are just so antiquated. So yeah, this is so obviously where the puck is going. And we're really excited about being able to help deliver that more rapidly and in a great way to our users.
So then my follow-up here is, can that vision of, let's say, it feels Robinhood-esque maybe, the like more futuristic version of Robinhood or whatever, can that coexist with self-custody? Because self-custody has always been a big emphasis in crypto, but maybe one of the bigger pain points for more mainstream adoption, because most people don't want to go, have to keep track of a seed phrase and so forth. So how do you put those two pieces together of appealing to this mass audience, but also offering a self-custodial wallet?
Yeah, that's a good question. I'd say yes. In the future that we envision, it is a self-custodial future where folks are, taking control of their own assets and accessing this on-chain world. I will say, yeah, there are a lot of, though there's a lot of different aspects to self-custody, which I think folks typically point to as being somewhat difficult. So there's sort of the whole seed phrase and recovery problem. There is the actual interaction with on-chain protocols and sort of that sort of checkout flow or transaction simulation flow. I think when you say self-custody is hard, there's many different kind of ways to slice and dice it and many different problems to solve there. And yeah, basically, we are committed to solving many of those issues. I think, coincidentally, our M&A roadmap is actually aligns quite well with trying to solve those things. Bitsky with sort of like the recovery, problem, Blowfish with sort of the checkout flow problem, and then actually even Simple Hash with sort of like the spam problem, and how do you actually protect people from things that they're getting inbound. And so I think all of those things add up. Solving all those things add up into an experience where self-custody is safe and easy to use. And I think that it is achievable, and the industry has made a lot of strides there. And there have been a lot of good ideas, but I think it's taken a while for someone with true distribution to actually put all of those pieces together and package them up into like a true consumer friendly package. And so I feel pretty confident that that world is we're approaching that world.
Yeah, I would just tack on. I mean, this is another great example of like how much can change in 10 years. Like a lot of the stuff that we all take for granted today just like didn't exist a few years back. And so there's the getting the innovation to actually work from a technological perspective. And then there's productizing that, packaging it in a way that resonates with your users. And as we talked about earlier, our users are, they're consumers, they're retail consumer users. We want to give them a premium experience. And part of that is making things safe and trusted and delightful. And that's what we focus on. So I think we're still early enough in the crypto timeline that a lot of this, it's funny, even just like thinking about the pitfalls, like Brandon said, there's like so many ways to slice and dice the pitfalls of self-custody, so to speak. So again, onus is on us. If we're trying to deliver the premium product, we have to solve all that from a product perspective. And a lot of that stuff is solved technologically. And there's some stuff that we're working on right now as well to that end. But yeah, that's our job. And then that's why we think we continue to kind of like earn our user base.
So to put it in a more streamlined way, I guess what I'm curious to hear is there a way to do Web 2, like true like Web 2 login style with self-custody, where if I lose my password, I can recover it in my email? Or is that always inherently going to make some kind of security trade-off as far as who has the custody of the assets?
Yes, for that specific case that you mentioned, like I think it is definitely possible. And there's many different types of key management systems being explored. There's the Shamir secret sharding, there's server-side wallets with trusted execution environments, MPC, and all of that. And so I think using all of those different technologies, there is definitely a way to produce the experience that you are talking about. I think it's going to take a player like us to actually package that together and put it in a way that really makes sense for end users. But again, yeah, key management I think and recovery is just kind of one aspect. I think when folks talk about the pitfalls of self-custody in Asia, sometimes they are referring to things like encountering a spam NFT in their wallet, or not knowing if a certain site is safe or not. And those are it's really going to take like a holistic approach across all of those to really deliver this true safe self-custody experience.
Yeah, it seems to me like people are always going to do absolutely insane things with their money. And so a consumer finance platform really has to reckon with like just people making really dumb decisions that you just couldn't, like, it's like, why would anyone do this? But it I'm sure if you talk to, people running Robinhood, they would say like, wow, people really make insane decisions, and the greater sort of oversight we have into being able to reverse things and so forth is important to giving a good customer experience.
I think that's a really important theme, is that there's sort of, I think by default, especially for people who are newer to crypto, there is this feeling of like when you're going from, call it your bank account to your crypto wallet, where it feels like, oh wow, now I have more responsibility here. And again, that's part of our job, is to actually package that product, like productize it in a way where people feel equally, if not more, secure in the actions that they can take there.
Are there specific ways that can happen?
Yeah. Well, Brandon, do you want to, I don't know if this is alpha leaking or not, but Brandon, do you want to talk a little bit about what we're cooking on?
Yeah, I mean, we are currently, designing it sort of a next generation key management system solution, both for internal use, but also for use externally with other dApps and things like that as well. Can't talk too much about it yet, but I think it is going to solve a lot of the problems that you're talking about. I think solve a lot of the issues with current solutions that sort of, I think, break some of the composability, like break some of the great pros of composability that crypto brings with these open permissionless ecosystems. So yeah, I think expect more there. Definitely before the end of the year.
Wow, very interesting. Some alpha for the Lightspeed pod. That's good stuff. Did my job today. Well, now that we've gotten that, I guess I'll conclude. Phantom, one of the consumer crypto goats, if you will, and so I sort of just want to conclude with something that we used to do more of that we don't do quite as much, which is founder advice. So, what advice would you give to founders or ops people or whatever VCs? I don't want to cut you out of this one, Sam. Of how to build products with users in mind, which historically maybe has been a struggle for crypto. How do people do that better?
I think something that has stuck with me for, again, since I've been in the space, is just the idea that you've just got to talk to your users like way more than you realize. And especially in crypto, that's true in all of tech, but in crypto, you look at where this space was, call it in 2014, and the type of people who were users or consumers in the space then, it's very different than it is today, right? So I think crypto starts from this very ideological place. And back then, in 2014, people like early Coinbase users clamoring for multi-sig vaults and things like this, where at the end of the day, not that many people actually used it. Like we went out of our way to build things that people were asking for, and it turned out that was a very small number of people that wanted to use that product. And so I think just getting out there, talking to your users, understanding what's pragmatic versus what's ideological and where you want to fit in that spectrum. I think Phantom from the outset has been very, very pragmatic. And so like that, it's a really nice guiding, North Star, so to speak. So I think the advice that I would give to founders starting out in crypto specifically is like, make sure the value prop that you're kind of trying to deliver to your users really resonates. And of course, as all VCs will tell all founders, you want to build something that people are extremely passionate about, that people really, really want. And if you can do that for a small group to start, you can generally find a way to expand it over time. And you just have to continue testing and iterating by actually putting it out there and seeing what the feedback is.
One thing that I tend to say a lot is when people think about building for users, they tend to jump straight into thinking about user experience, UI, and just sort of how a user might use your app once they're in the walls of the app. But I think fail to recognize that the user experience and user journey is actually pretty holistic and encompasses many different surface areas. There's customer support, there's brand marketing, and things of that nature. And so just really thinking about how a user interacts with your brand, from front to back is really important. It's not just the user experience doesn't live just within the walls of the app. I'd say that's one. And then another, I think, big piece of advice is do fewer things very well, especially in crypto. It's really easy to sort of get caught up in the feature rat race, so to speak, where there's sort of every new day or every hour, there's some new trend or meta. And you can feel like if you're a crypto founder, that if you're not keeping up with that, it's as fast as possible. It can kind of feel like you're drowning. And I'd say in my experience, it's been a lot better for us to really double down on the core of what makes Phantom great: speed, reliability, safety, and things like that. And the more that we can double down those things, the stronger the brand becomes, and ultimately, the more successful the company. So, yeah.
Well put. Good note to end on. Brandon, Sam, it's been a fun, wide-ranging conversation. Thank you guys for taking the time and chatting with me today.
Yeah, thanks, John.
Thanks for having us on.
Thank you, everyone. If you made it this far, please give this episode a like or a 5-star review wherever you get your podcasts. Follow us, retweet us, all that good stuff. If you enjoyed this episode, we'd love if you shared it with a friend, and we'll see you all again very soon.